Welcome to this explainer. Today, we're rolling up our sleeves to figure out exactly what on earth is going on with ARM holdings in 2026. If you've been keeping an eye on the semiconductor space, you already know ARM is an absolute giant. But their recent market movement, it goes way beyond their historical performance. It's a total breakout. So we're going to bypass all the standard financial punditry today. Instead, we're diving straight into the raw data, looking right at their SEC filings and investor presentations to untangle the anatomy of this search. Right out of the gate, we have to talk about this massive number, 80%. That is how much ARM stock has exploded so far in 2026, and Wall Street is completely buzzing about it. Now, look, an 80% run for a mature mega-cap tech stock in just a few months, that is definitely not normal. It's a huge signal. Investors aren't just cheering on a good quarter here, they are entirely repricing the company's future. To figure out why, we need to understand the new narrative that's driving all this trading volume.
And this headline right here really hits the nail on the head. The core story driving the stock is a massive, highly strategic pivot into the artificial general intelligence, or AGI, market. As Ticker points out, the market is aggressively buying into ARM's bet on what's essentially a $100 billion addressable market. This isn't just about making the chips that power our smartphones anymore. It's about providing the absolute foundational architecture for the next era of AI.
To truly grasp this breakout, here's our game plan. First, the 2026 stock search. Second, their two revenue engines. Third, we'll go inside the Q4 financials. And finally, we'll unpack their $100 billion AGI bet. All right, let's jump straight into part one, the 2026 stock surge. So the stock has been trading at around $209, and you can see that wild 52-week range from 100 up to 240. That level of volatility really shows a market that's actively wrestling with how to value this company. But here is the crazy part. Look at the long-term projections. That TRKR model target for 2030 is forecasting a climb to $1,175. For a quantitative model to predict a more than 5x increase from current levels, it essentially has to assume near-perfect execution and massive margin expansion. So how do they justify that kind of future? Well, to answer that, let's move to part two, the two revenue engines. Before we get completely lost in the spreadsheets, we need to ground ourselves in the physical product actually driving this growth. ARM doesn't actually manufacture physical silicon chips. They aren't the ones running multi-billion-dollar fabrication plants. They are an intellectual property company. They do all the heavy lifting in R&D to design the incredibly complex architectural blueprints, and then they let other companies actually build the physical product based on those designs.
Because of that setup, it's absolutely crucial to understand ARM's two-engine business model. They basically monetize their blueprints in two steps. First, there's Engine 1. They charge an upfront fee to license their chip designs. Then comes Engine 2, and this is where the real magic happens. They collect a recurring royalty for every single chip shipped that uses that design. It's brilliant, really. It essentially acts as a highly scalable toll booth on the entire global semiconductor industry.
And the success of those two engines is completely undeniable right now. In Q4 of fiscal year 2026, license revenue jumped 29% to $819 million. That massive upfront surge is a huge leading indicator. It tells us companies are aggressively buying the rights to build future products right now. Meanwhile, the royalties steadily ticked up to $671 million. That's the compounding effect of past licenses finally entering mass production. Okay, let's take all of that and roll into part three, inside the Q4 financials. So, what did those two engines actually produce? A record-breaking $1.49 billion in total revenue for the quarter. That is up a massive 20% year over year. For a company of ARM's size, growing the top line by 20% in a single quarter is just phenomenal. It proves the intense demand for their latest architectures is translating directly into cash flow. But honestly, revenue is only half the story here. You have to see this next number, because it's the ultimate proof of how powerful an IP business can be. 98%. That is their non-GAAP gross margin. I mean, you almost never see margins that high. Because they aren't paying for raw silicon or massive factories or shipping physical goods, almost every single dollar of revenue they bring in flows straight past the gross profit line. It's genuinely one of the most profitable business models in tech history. Add to that an astonishing 350 billion cumulative ARM-based chips shipped globally since 1990. That is their moat. When 350 billion devices, literally everything from the smartphone in your pocket to the world's largest data centers, run on your architecture, developers are forced to build software optimized for your platform. It creates this massive gravitational pull that makes it incredibly difficult for any competitor to come in and displace them. Now, upfront license revenue can be a bit lumpy, right? Big deals close in some quarters and not in others. So to see the real underlying trend, we look at annualized contract value, or ACV. It normalizes things. And their ACV just hit $1,660 million, increasing 22% in Q4 alone. This proves that the underlying recurring commitment from their customers is growing incredibly fast. This isn't just a flash in the pan, it's deep structural growth. Which brings us to our final section, Part 4, the $100 billion AGI bet. This is where the story shifts from past performance to future dominance. Their new Arm AGI CPU, which they remarkably co-developed with Meta, already has visibility on over $2 billion in potential demand. Data centers are racing to upgrade globally, and Arm isn't just watching from the sidelines. They're partnering directly with hyperscalers to custom build the exact compute subsystems needed to run massive neural networks. Plus, as data centers adopt their premium Arm v9 architecture, Arm captures an even higher royalty rate per chip. And the momentum isn't slowing down anytime soon. Looking to the very next quarter, their guidance projects another exceptionally strong $1.26 billion in revenue. And they are maintaining that incredible operating leverage, keeping OpEx tightly controlled around $760 million while guiding for an EPS of 40 cents. So they are managing to invest heavily in next-gen AGI tech, all while making sure that top-line growth falls straight down to the bottom line for shareholders. So, I want to leave you with this provocative thought. When you have a company operating with near-perfect 98% gross margins, an unbreakable global ecosystem of 350 billion chips, and a massive transition into a $100 billion AGI market, just how high can this breakout go? The foundation is absolutely there, but the market's expectations are sky-high too. Keep a close eye on their upcoming earnings to see if they can continue delivering on this massive AGI promise. Thanks so much for joining me for this explainer, and we'll see you next time.